Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now, we trade the euro both ways, both the U.S. dollar as the base currency and as the quote currency. But we've been trading the U.S. dollar as the base currency for a couple of years now, and you'll notice that, so I needed to look at a longer-term chart. December of '08, we saw volatility peak, and this is the U.S. dollar against the euro, so at that point, the dollar started getting hit pretty hard. The dollar has been hit until last Thanksgiving or so, where we've seen a nice rally in the dollar, but the volatility, if we look at it here, volatility has gone nowhere. That's not a very good arrow. See if I can do that better. The volatility has really gone nowhere, and I think I just mentioned that. Interesting that with the euro moving, or with it being so much in the media, we haven't seen that much movement. Here's the dollar. Here's the British pound against the dollar. So the British pound has gotten hit pretty hard. Remember, we look at the base currency to decide what's happening here. So the base is getting weaker. So the pound is weakening, but volatility is not changing. Where do I get that from? Well, you can go to the FX options site. You can type in GBP. You could look at the price, and then in the bottom pane will be volatility. And you'll see the different historic and the implied. What you're seeing there is that traders in general are not that scared. Interestingly enough, because the pound really did get hit pretty hard, but the option premiums usually would reflect that, and they haven't. And a longer term, this is the U.S. dollar against the British pound. The symbol is BPX. So we saw the dollar make a major rally move. This was very interesting. Right before Lehman collapse, we saw the dollar rally, so you sort of could sense it, if you will. That's why I think currencies are so important, because, well, Lehman collapsed here, but the currency market was sort of letting you know by this big move in volatility that was occurring in the August time frame, about 6 weeks earlier. So we had a massive move in the dollar and a massive move in volatility, and volatility has been stagnating ever since. So the volatility is what you want to watch as a trader, because it gives you clues on what all the other traders are expecting. When they're expecting more movement, you got to just be somewhat fearful or be ready for that. When they're expecting no movement, that does not mean there won't be any movement, but you just got to keep your eye on it, because, again, we could go through periods of low volatility for days, weeks, months, or even years. So just watch volatility. Dollar against the Aussie, and this is the symbol that we've had out for many years now, the AUX. So what happened in the U.S. dollar against the Australian dollar? Well, a massive rally, and that sort of happened. This is why I like looking at the Aussie, because that sort of happened in July. So the Aussie dollar started to fall in July. That was really something that very helpful for us traders. Started weakening in July. The other currencies started weakening about a month later. So this move here, you could have said, oh, wow. But also, the Australian dollar was the first one to sort of gain strength again. And you'll notice that by November, December, you see that the U.S. dollar was peaking and volatility started to slide. What have we seen recently? Well, the dollar, some would say, is trying to find a bottom. I think it just made a new low the other day, though, but it depends how you view charts, and volatility is very, very, very low. And here is today's action. This is this morning. The U.S. dollar made a new low because the Australian dollar made a new high. But we see very, very little volatility. And the symbol here is AUM, trading at 93.33 as of this morning. New high here, you can see. That's the Aussies versus the U.S. dollar. SPY, I like to throw the equities in so you can understand how important currencies are. because, again, remember when I showed you that Australian dollar weakening, well, it started weakening here, and I guess that the SPY did sort of start weakening at that same time frame. So volatility is down, much lower than it was, many months ago. So here's the emerging market index, EEM. Same sort of thing. We see volatility peak here in November. We're looking at that amber line. The blue is the historic, but I want to look at the amber to see what the market's expecting. And the amber now is sort of very, very low because we're just not getting much movement. Here are the iShares for the MSCI Australian Index. So I like to watch this to see, again, what's happening on Australia. We know what's happening in the currency, so the currency's strong. Are the equities following suit? And the answer is yes. So it's interesting to note that, currency vols are dropping, so are the equity vols. Here's BHP, I should say. They are a diversified natural resource company from Australia. So I like to look at some of these companies that are outside the U.S., and because currency does affect them, especially for us, those of us that are living here in the United States, and I'm taking my U.S. dollars and buying Australian dollars with that, essentially when I'm buying, making an investment, you'll notice here that the implied volatility has dropped quite a bit, and you'll notice that we're in a nice bull trend there. And volatility is looking basically the inverse, that you see volatility lower and lower as the asset moves higher and higher. Here the iShares MSCI Canada Index, seeing pretty similar. We see November of 08, we saw the vols peak, and nice sort of divergence there between, we saw vols peak here, but then the prices go lower in March, but vols didn't follow suit. That was a great time to possibly think about maybe buying some, because again, there was divergence there. Royal Bank of Canada, well, look at vol here. It's going nowhere. Vol trading at about 18% down from the 50-60%, and Royal Bank of Canada traded at a new high, I think, this morning. So you'll see, again, the same sort of relationship. The implied vols move lower as the asset moves higher. And this should help your option strategy decision-making process. Here the iShares MSCI Germany Index. You'll notice that Germany Index has not made a new high. That might be because Europe is very, very weak. So the size of Europe essentially is the size of the United States, and the European market is not coming back as quickly as the U.S. market. And of course, the Chinese market is very, very robust, as is the Australian market and the Brazilian market. So you got to remember, where are you trading, and the assets are going to, well, they're going to be affected by different factors. So the currency is one of them. Volatility here in Deutsche Bank. Well, interestingly enough, we see volatility was exploding there in the October, even into the spring, but then we saw March, April, we saw the stock take off and volatility decline, and we've seen that sort of happen ever since. But volatility is trading, well, this morning it was trading 37%, which is it low or high? And the question is, we don't know. There's no right answer on that because, again, we're trading the future. Is it going to be higher? Is the asset going to be trading in a more volatile fashion or a less volatile fashion? But the trend of that implied volatility sometimes could be helpful.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.